Hosting a pay run in CenterPoint creates a set of balanced transactions using accounts. Accounts represent a company's financial picture in accounting reports such as your balance sheet and your income statement. Let's go over how accounts are organized in CenterPoint and how to use accounts to meet your financial needs. We're going to go to the menu option Setup and Accounts, and then Accounts again. In your payroll setup, each checking account, each earnings, each tax, deduction, and benefit is assigned to an account, so that when you post a payroll transaction, the accounts describe what's happening in the movement of that payroll activity, and the result is updating the company's account balances. What you are seeing here is a list of account types. Account types is the highest level in the hierarchy of the accounts. And the account types are the standard types where assets, liabilities, and fund balance or retained earnings is representing the balance sheet. Cost of goods and expenses are representing the income statement. If you are using CenterPoint accounting with payroll, you'll have additional account types listed here of revenue, other expenses, and other revenue. Each account type is organized with account categories underneath it. And the account categories are describing particular types of accounts underneath that account type, and in addition maintains the properties of what that particular account type might be doing. For example, cash is representing the different checking accounts that you're using for paying payroll, and the cash accounts will have the ability to maintain direct deposit details for doing direct deposit with your bank. In the case of liabilities, we have payroll liabilities or other current liabilities. The payroll liabilities that are assigned to your taxes, deductions, and benefits are creating a payable when the pay run is posted. If you use an other current liability, it would not create a payable. It would still update the liability balance, the same as the payroll liability balance is getting updated, but it doesn't create a payable. So those are different properties of those two categories. If we expand expenses, we'll see the categories underneath expenses, and each one describes a different kind of expense that you'll have. So payroll expense would be your different labor accounts. Payroll taxes will be your different payroll tax accounts. Benefits will be your retirement accounts and health insurance accounts. So it just is a way to organize those accounts. And again, if you're using accounting, you would even have additional categories under here. And you might be putting your salary and wages accounts under labor expense. Or you might even want to put labor under a category you would have under assets for labor work in process, or a labor cost of goods. It all depends what you want in your accounting activity of which account that you assign to those different pieces in payroll. If we expand the account category, we're going to see accounts underneath it. The accounts are actually where the activity is getting posted to, not the category, but to the account. So we have different accounts here for each one of our different tax and deduction benefit accounts that we have. And you'll notice that under state taxes payable, there's a plus sign. That means there is a second level account. So you can have up to 3 levels of accounts in CenterPoint, and that is for reporting purposes. So if we look at state taxes payable, underneath it, we have an account for each one of the different states that we need to maintain for this particular payroll. When the activity is posted, it will always post to the lowest level of the account. So it's either going to be posting to the Colorado taxes payable, the Minnesota taxes payable, or Illinois taxes payable. It will never post to state taxes payable. However, when we're doing reports, we could roll that up to a level 1 account detail, and then we would see all of the activity to these 3 accounts being summarized to state taxes payable. That's what the purpose of having the different levels of the accounts is for reporting purposes. And the same goes true under state unemployment. We have the state unemployment as a level 1, but then underneath it, 1 for each one of the different states. So just a way of maintaining your accounts. In your accounts, if you've just started payroll, you can delete any account that you don't need. It will not let you delete it if you've already used it. If you need to delete it, you can highlight the account and click delete, and it will come up with the message. And if it has not been used, it will go ahead and remove that account. But if it has been used, as it has been in the sample data, it would give you this message and wouldn't delete that account. You can edit any one of the accounts. You can highlight the account and either double click on it or click the edit button at the bottom. That'll take you to the detail of that particular account, where we could change the name if we want to. We can change the abbreviation. We can change the number. If you're using account numbers and you want your numbers to be formatted differently than what it's allowing right now, that's maintained under a preference. And you can go under File, Preferences, Account Settings, click on the Database tab, and here's a guide on how that format is set. Right now it has 6 number 9s, and the 9 is a digit placeholder, meaning that you can have up to 6 digits in that account number, but it's not requiring you to use all 6. You could use 4 and it would allow you to do that. If you wanted it to be required that you always use 6 digits, then you would want to enter 6 pound signs instead of 6 9s. You can also have alphanumeric, so if you wanted a placeholder as an alphabet letter, then you could do that also. If you want a dash in the middle, if your account number is maybe 4 digits and then a dash and then 2 digits, you can put a hyphen in there and it would be formatted that way. Once you change your format, you would want to click Save, and then it would use that new formatting in your account number. It's very possible that you'll want to add new accounts. And to add new accounts, let's go down to our expenses again. And perhaps under payroll expenses, we want more ways of dividing up our wage accounts to different accounts for our income statement. So we can click our new button down at the bottom, and we can make a new account. And maybe we want an hourly, so we're going to do an abbreviation of hourly. And we can put in account number here and a name. So we're going to call this hourly wage expense. The account type will be expenses, or you can click your lookup list and see from the list which ones you have to choose from. And the category, which will be payroll expense. That's all the information that we need in our expense account, and we can go ahead and click Save. That created our new account. Another way to make a new account is to highlight one that's similar to one that you want to make and click the Copy. When we do Copy, it'll come up with a new screen again. We can change this. Maybe we want one for piece rate. And we'll change the account number to something else that we haven't used. And we'll call this one piece rate wage expense. And it already filled in expense and payroll expense from our copy. And we're ready to save. And that created new accounts. Now our accounts that we've created will be ready for us to assign in our payroll setup. If you need to create a new account for more detail in your payroll posting, and now we need to get those assigned to the setup, there's a hierarchy involved there also. So the first level of where the account is assigned is when you first created the earning. So if we go to our earnings, and let's take our hourly pay for example. If we go to hourly pay that account is assigned here in the detail, and we can change that to hourly wage and update the expense account that's being used and save it. If we were to create a new employer at this point, it would pick up the new expense account assignment. If we go to Setup, Payroll Details, and Employers. If we added a new employer, it would pick up that assignment. But this employer already had hourly wage assigned to it, so it's not automatically going to update that. We're going to need to update that manually, because it's possible to have an account assigned at the basic setup of the earning, and the employer will always override that. It has a higher hierarchy for assigning the account. So we're going to need to assign it there. And then the other level is at the employee level. When you assign the earnings to your employees, and you first create the employee, let's take Sam Apple for example, it will pick up the expense account that was assigned at the employer level, but notice it still says salary and wages. That's because when this hourly pay was assigned to Sam Apple, the expense account at the employer level was salary and wages. But we changed that, but it was after we had done this. So we're going to need to change it here also. And that updates totally to this employee. So now his next paycheck would go to hourly wage. If we look at another employee, let's look at Jerry Berry here and go to earnings. I'm sorry, he already had hourly also. Let's go look at John Cottonwood. He did not have hourly. So if we assign hourly to him right now and look at his, you can see that it did update it with hourly wage. That's because this particular employee did not have hourly before. It just got assigned and it picked up the assignment that was at the employer level. So that's basically how the hierarchy of assigning expenses will work. And additionally, at the time that you run payroll, you can change the expense account if needed. If there's a special case where an employee's earnings needed to go to a different expense in that particular payroll, it can be written at the time of the pay run in the earnings detail button. And that kind of sums up how to handle your accounts in CenterPoint and for reporting on your financial reports.